And as I was saying, if there is hope from anywhere for Credit Suisse, maybe it's coming from Deutsche Bank. We've been speaking to the CFO, James von Moltke, asking him about the business in the second quarter.
The drivers have been strong in the core businesses in the quarter. So that momentum that we talked about last quarter carried through to the second quarter for sure. Our corporate bank was up 26% year on year, driven by not just the interest rate changes, but also volume growth, fee income growth. And the investment bank performed very well at 11%, 32% in our FIC business. So we've been able to navigate these markets, take advantage of the trends. Our clients are engaging with the company. And of course, in these markets, risk management has been a key element as well.
If you're saying your clients are engaging, and what are your clients essentially doing? Because many clients are just doing nothing right now.
Well, look, I'll give you the example in the corporate bank.
Yeah.
We're working with clients to think about their supply chains, to look at how you invest to bring production onshore or closer to home. Obviously managing the risks out there, their foreign currency and FX risks and rates risks, for example. Those are all decisions that our corporate clients need to make. And on the retail side or the private client side, of course, they need to make investment decisions in these markets, either to protect wealth or to look for opportunities. Those are dialogues that are happening all across the bank every day.
What are you advising your clients when it comes to, for example, I mean, you were saying Forex exposure. I mean, we've seen the dollar being very strong. Are you expecting that to stay?
Well, look, there has been a strong trend over the past sort of 6-9 months. That started to slow now as the ECB is taking monetary policy action here in Europe. There hasn't been a new trend established, so we've needed to protect ourselves from the weakening of the euro. And at this point, I wouldn't say there's a strong bias in either direction. There's certainly a concern that the euro will weaken more, and that's something that we need to be vigilant about.
Also, if you look at the interest rate expectations, the hiking cycle here in Europe, it has gone down from mid-June quite a lot. So what are your expectations surrounding that, and what are you advising your clients?
Well, look, I think in any major interest rate cycle, there's always uncertainty as to the extent of the moves. And given the slowing economy, that's obviously caused the rates markets to think twice on what that terminal rate will be. Our view continues to be that the ECB will need to move more aggressively than perhaps the current expectations are. We view the terminal rate to be 2% here in Europe. But the market is at this point unsure. We've gotten to zero. There's an expectation of more steps, but no certainty at this point how far it'll go.
Let's look at your business again. The cost-income ratio, you have adjusted that target slightly to the mid or low to mid 70s. Previously, it was 70. Is that because of high inflation as well?
Look, inflation certainly had some impact, and mostly insofar as some of the downside levers that we are typically able to pull, it's just harder to pull in an environment where vendors are working to preserve their margin, where there's very little sort of play in the compensation cost lines. For us, we've been on a long journey and we've made enormous progress over these past several years. We've taken literally billions of euros out of our cost base. But at the same time, it's been important to us to sustain the investments that have been necessary in our company, whether that's in IT or controls or also in business generation. And so the change in our guidance for this year reflects, firstly, the decision to invest, and secondly, some issues that hit us, if you like, setbacks that were outside of our control in the first half that may continue into the second.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.